everybody. Welcome back to the Index. I'm your host, Alex Kehaya, and today I am joined by Manish Dutta, the founder and CEO of Alphaledger. Alphaledger is building infrastructure that lets real-world assets and financial institutions move on-chain in a compliant, programmable way, bringing capital markets, tokenization, and blockchain together in a way that actually works for enterprises. Manish has spent years at the intersection of fintech, capital markets, and crypto, and today we're going to dig into how tokenization, digital asset treasuries, and on-chain finance are reshaping how companies raise, manage, and deploy capital. Manish, thanks so much for coming on the show.
Alex, it's great to be on. Thanks for having me.
So I start kind of the same place with everybody that I bring on. And I love to just get a better understanding of what gets you out of bed in the morning and why you've been doing this for so long. And, I know you guys pretty well. We've worked together through my company, ABK Labs, in the past. And so I know just how challenging, or I have some idea of how challenging what you guys have built is to get done. And that's like, for anybody to stick with it for that many years, you got to have a really strong reason to be pursuing it. So I would love for you to share that with everybody.
Yeah, look, what gets me out of bed is really the belief that we are rebuilding a financial infrastructure, right? Not just chasing cycles. And as you pointed out, I've spent a long time in capital markets. I was at a firm called PIMCO, which is not that too far from here where we live, right, in LA. So it's in Newport Beach. When I started, it was a $240 billion shop. And when I left after 20 years, it's a $2 trillion shop. And you really notice things that trillions of dollars are moving on a system that was designed decades ago. And part of the industry, stuff that industry has really built, they work. Clearly they work, but they're brittle. They're opaque. They're incredibly manual, and most people really don't see it, right? So tokenization, as we think about it, if done correctly, it's not about speculation. It's not about novelty. It's about upgrading how capital is formed, how trust is established, and how value actually moves. And one of the most fundamental and the most important thing, at least for me, is how new investors can come on chain and access this capital. That's the work that feels like it's worth doing. So that's what gets me up. And 2025 sort of reinforced that, not just theoretically, but with the new regulators, the asset managers, the real market operators, they're starting to align. So you realize that this is one of those rare moments where conviction is starting to meet the timing. And so that's what gets me up, which is effectively building a new financial infrastructure.
Yeah, it's fascinating. I think I agree. 2025 was the year that we sort of started to bridge the gap in the sense that people in traditional finance not only started, they've been talking about it for a long time, but actually started implementing some of these things. And you're starting to see some of these experiments happen in the real world. And I think the digital asset treasuries over the summer, like all these digital asset treasuries that launched, were a part of that, where some of them work great, some of them not so much, but like them coming to Wall Street was a forcing function to educate a lot of people. And I talked to a bunch of CEOs of public companies this summer who they were starting to shake their heads like, oh, I get it. I get why I want my equity tokenized on chain. Like this simple, and you talked about it just now, this simple shift of 24/7, 365 global access to trading that never sleeps is a big difference than what the NASDAQ currently does, for example. There's all these markets that you got to go through all these intermediaries, and you can't have direct access to these opportunities. And now that's kind of gone. Obviously, still regulated. You still have to pass KYC and KYB and things like that to get access to trade these stuff on chain. But you don't have to go through all these brokers, and it's not like you're limited to your time zone or something like that, right? Like you can trade it all the time. So I think we are seeing that shift. What about talk about what Alphaledger is, and then I want to get into what the product actually does today, and then I kind of want to talk a little bit about the journey and what was hard to get here.
Yeah, look. Let me just talk about Alphaledger and kind of get it out of the way so we can talk about some real good fun stuff. Which is, when I started the company in 2019 with my co-founder Chris Wade and another partner, she's now retired. Her name is Tammy Arnold. the fundamental premise really was anything that can get tokenized is going to get tokenized. The question really was how and when, right? So Alphaledger is a heavily regulated company. We are a broker dealer. We are a transfer agent, and we're also an investment advisor. And why do we have these regulatory stack? Because I think to me, that answers the question of how it can get tokenized, right? Tokenization in itself is not a new concept, but tokenized regulated assets are an important part of the puzzle, which is once an asset is regulated, you can't lose them. You has to trade through some regulated sense because that's what gives the US the global might. Because things are regulated, you know where the money is coming from, you know where the money is going. Yes, system is opaque, but trillions of dollars move, and trillions of dollars are looking to come to the US. They must come through regulated process. And in this case, in the past, people were doing work on paper, Excel sheets, old COBOL, CSCIS program. They still run. But they have built an ecosystem that has allowed wealth to be created, that has allowed trading to take place not 24/7, but things do trade 24 hours. They're expensive to trade that way, but it happens. So Alphaledger at its core is bringing regulated assets on chain with fully decentralized capabilities. We want people with full access. Give them opportunity to trade and build wealth. That's what we're building. Now, you've talked about that. Look, I think to me, solution as people are becoming more innovative, technology is becoming more ubiquitous, solutions will find a way. And that is a solution to the problem that existed, which is the regulations. The past administration and the regulations didn't really allow or didn't give the market the opportunity to prove the technology is real, the technology works. It was done in such a way that the market moved offshore. And when things start to move offshore, it creates a chamber, an echo chamber, which allows for activities to take place, which will force some regulators to act and some regulators to take a seat back, right? So with the change in administration, what you're now seeing is people taking those creative ideas and bringing it forward in a more regulated fashion. That are regulated. Now, is it the right concept before the ETFs became public? I don't know. But I think ETFs to me are the right approach to what DAT is trying to do, because with DAT, you create a lot of challenges, right? I mean, is it just holding a cryptocurrency or is it trying to build a business? Because it's really an equity organization, whereas an ETF is an ETP. I think to me, that's a fundamental difference between DAT and ETP, right? Which is you're giving people opportunity to own versus you're giving people the opportunity to invest in a business, which is the DAT, whereas an ETP itself is an investment vehicle. So to me, that's a fundamental difference. And I think as we think about regulatory clarity, if I can say it correctly, then you'll start to see more optimized solutions coming on chain. And I think you're starting to sort of really see that where origination, compliance, identity, cash movement, and settlement are starting to come together, right? They're still verticals, but they're starting to stitch together as a horizontal step, which will allow for true on-chain capabilities. So that was a long-winded answer, but I mean,
Yeah.
look, I mean, there's a lot to break down in terms of what's taking place on chain. And you're starting to see the evolution of regulated assets coming on chain because of the change in administration, because of the change in the views and the maturity of technology.
Well, yeah, and I mean, I think it's really I did an episode with Superstate a while back, and they work pretty close with the SEC. Like the fact that the SEC is even willing to experiment, and they're doing a lot of things that they didn't do for the past couple administrations in a row. And now that those barriers have come down, and I think that's helping a lot to advance the whole space. And one thing I wanted to understand more and share with you people listening. Talk about these licenses you guys have. You have a broker dealer. I think you have a couple other ones. Like, what are they? Why do you need them? And how hard are they to get?
Yeah, look, they're really hard. So, when we started in 2019, I think we were of the opinion coming from a regulated market that a broker dealer and a transfer agent are critical functions of the market. Why transfer agent? Transfer agent is the recording agent that records the ownership. That's the fundamental block. Because when you own something, it needs a book of records. So should there be a challenge? Should there be an event, whether it's a regulatory event, whether it's a legal event, whether it's a family event, you have to prove ownership. And how does that happen? That happens through a transfer agent. Why is a broker dealer important? Because it intermediates all the secondary market and primary market activity as it stands in the US at the very least. So we built a broker dealer in 2019. And we were fortunate that we became the first firm to record municipal debt on blockchain. It's an important part, right? A lot of people ask me why municipal debt, because I think to me, we were trying to figure out how best can we engage the regulators, because in 2019, 2020, there was so much hype in blockchain. The regulators didn't understand the difference between Bitcoin and a blockchain. They didn't understand how wallets work. So we had to start somewhere. When we started, we immediately engaged the regulators. We have not had a challenge with them. I've always been of the opinion that how you approach the regulator is critically as important as how you approach technology and disruption, which is you have to care for it at the first step. So we did that. We built a broker dealer. Our broker dealer can do fixed income assets, can do equities, can do ETFs, can do treasuries, a lot more products than we sort of do today. But that's a function of working with the regulators and ensuring that all the books and records, all the capabilities and client capital is safeguarded properly. I think safeguarding of capital is an important term that I think folks in crypto should understand, because you don't want a rug pull. You can't rug pull anybody in the regulated market. We built a broker dealer. Then we built a transfer agent, which was an important step in terms of recording the ownership for assets that originate on chain. And I think you're going to hear this theme. We have always been a believer that on-chain origination is the way forward. That's the only way to bring assets on chain the right way. It's not to say that tokenization effort that is taking place today is not correct. It has to happen, right? Because there are trillions of dollars stuck in the equity market, in the fixed income market, that have to come on chain. So that is an important step function.
Can we break down a little bit here the difference? Because I think I understand it, but I want to make sure. With origination and having a transfer agent, that means that I can, let's say we're tokenizing Tesla stock, and I own a bunch of Tesla stock, and I'm like, okay, I want to trade my Tesla stock on Solana. I can then use your platform to move my Tesla stock from, I don't know, whatever yep. bank I use to custody my stock. And then your transfer agent gets the custody of it, and issues the token that represents my one-to-one representation of my stock on yeah. chain. Yeah. The difference between that and secondary markets is like how StockX works, right? Like, I don't think they have a transfer agent. Maybe they do, but like my understanding of how that works is there's like a special purpose vehicle that holds a bunch of Tesla stock, and the special purpose vehicle is tokenized. And traded on chain, which is very different. It's not actual direct ownership of the shares with all the rights and everything like that comes with that share.
Yeah. Yeah. So I think you bring up two critical data points here, Alex. One is a narrative-driven tokenization that's taking place today. And one is the tokenization of real-world assets, the equity. In this case, the example that you used was Tesla, right? So let's take a step back. Today, when you buy a stock from your broker dealer, whether it's Schwab, Fidelity, Robinhood, you name it, right? It's in the name of the street. It's not in your name. Now, we have had a couple of instances where companies like Galaxies have gone and issued tokenized share. But think about the contortion that you have to take to bring on the ownership. Okay, so what's known as DRS, direct registration. The DRS functionality has existed in the market since the early 90s. I want to say 1993 is when this was really introduced, where you could call your broker dealer and say, I, Alex, want to own my Tesla in my name. Your transfer agent will ask you to fill out a bunch of form, and now the stock is in your name. What does that do? It gives you warm and fuzzy that Alex now owns Tesla in his own name. Should the broker dealer go down, there'll be challenges, and you will avoid that. But it creates another secondary challenge, which is how do you trade that stock? So now you own it. What do you do with it? Right? So if you look at what Galaxy has done, they've taken the first step. But in order to own Galaxy, you really have to buy the stock. You have to let your broker dealer know that you want to transition to a tokenized stock. Then you go through another round of KYC. Then you pick up the stock and put it in your wallet. And then what do? You feel good about it. There is no secondary market for it. So it starts to create a liquidity challenge that exists in today's tokenized world. What SPV structure is really doing is it's solving for that by giving you access to the price volatility and movement, but the underlying stock is still in the SPV, which is tethered to the traditional markets. So it has greater velocity trade. In our approach, I think it's a hybrid approach that we are going to deploy to bring on equities on chain. Why we haven't been the first ones to do equities? Because we want to do it the right way. And that's the fundamental difference between us and some of our competitors, which is we like to experiment, but we experiment in a controlled fashion versus in a public fashion. So when we bring equities, you would be able to own the equity in your name. It will be in your name should you decide to have it, yet be tethered to the market for greater liquidity than a traditional tokenized wrapper of an equity that sits on chain in your wallet looking pretty but doesn't trade. So that's the fundamental difference in how I want the
why doesn't that Galaxy token trade? Is it just because there isn't a secondary market yet, or like why?
Look, I mean, you need market makers. You need the core infrastructure that's not there, right? So if you think about a crypto that's natively originated, it can talk to Camino, it can talk to Loopscale, it can talk to Jupe, it can talk to a bunch of other market makers that are out there because it's natively created on chain. That's why native origination is such a fundamentally important step. However, bringing on equities and bonds on chain still requires the traditional market players to be onboarded. And that infrastructure is lacking today. It's not to say that it won't be there. So while you're seeing the growth of private funds, right? Private funds are like, especially SPVs. So today, we have a private fund called T12, which is a daily a liquid fund. That means you can come in daily, you can leave daily because the structure of the fund is tethered to the traditional markets. And treasury funds have been done. So that's the fundamental step that the market players are taking today, which is to create liquidity for the investors on chain and allow for the regulators to understand what's really taking shape. So I think those two are joined together, and you have to move lockstep and barrel as you bring on these equities on chain. And part of that really is to work with transfer agents, the broker dealers, the market makers, to have them understand that Alex, who's sitting on chain, wants to invest his capital, is not looking to invest his capital through direct old school channels, but through USDC, through Pi USD, whatever stablecoin that may be in your wallet. And you want that direct ownership. But with direct ownership, you also want liquidity. You want to be able to take that token and go to Loopscale. You want that token to be able to go trade on a secondary market exchange should you have to sell it. How do you sell it? You don't want to call your transfer agent, then call your broker dealer, transition that token back. You've already lost 3 days in the market. That's the big challenge. That has to be solved for.
And you guys have not. I think you've gotten a lot closer to getting product market fit, right? And I think the signs of that are apparent. You guys tweeted about a customer that you just brought on. I'm curious, and that customer I think was from a competitor. They chose Alphaledger over this other competitor. What are they actually looking for? Why did they end up deciding to tokenize with you versus somebody else? And how does that kind of feel? It must feel pretty good.
Feels great, man. Look, I mean, I think, as you said at the onset, you worked with us, right? I mean, with your ABK labs, you've seen the quality of technology that we're building. We are going level deeper than majority of the people go, which we go from the point of regulations to building technology. And we are focused on a single chain. We are not focused on jumping around narratives and chains. A lot of the folks go, come to Solana, talk about it, and move off. And they all go to an L2 solution. I'm very much focused, as you know, on an L1 solution. So it is becoming apparent that on Solana, that we are becoming the real securities tokenization engine. We are baked with fundamental thesis of regulation. We are baked with the fundamental thesis that tokenized assets are going to come on chain. And fundamentally, how do you give issuers the control that they need to know that the token is being used by the right parties involved? And I think so. You've seen our technology. I think it's a total kick-ass game in that. And more importantly, the institutions They're not in the business of buying innovation. They're in the business of reducing their challenges and trying to build access for the next frontier, which are the new investors. And they obviously care about operational capabilities. They care about regulatory posture. So that's why you're starting to see, as we become more vocal publicly, we are starting to attract clients that previously didn't really have a choice. It's hard to build a tokenized solution on Solana. Solana is a kick-ass technology, but you know this. Building a token is not the hard part. Building a regulated token on Solana does take thought process, does take the right technology, does take the right control. And we now have that solution in spades. Simplify Asset Management was the first one that came on. Oxbridge, which is a publicly listed company that's going to bring on reinsurance products. They're the next ones. We're bringing on Farm Credit that we recently just made public. We have talked about bringing Tesla infrastructure, which is these supercharging stations on chain. And this is all going to happen through our technology called Vulcan Forge, where you had a lot of hand in helping build and design early days.
That's amazing. Yeah. So this episode, a lot of founders building on Solana and just generally are going to see it. And many of them that are just starting out, especially, have a rough road ahead, as we all do when we're building companies. Do you have any war stories you can share of challenges you faced over the last couple of years, kind of how you guys overcame them and how that kind of impacted you personally?
Yeah, look, man, first you got to strip away the noise. I mean, if you're on Twitter, and I had to learn how to get on Twitter, right? So let me rewind the clock. We joined Solana on conviction that this is the best technology that's going to be out there. So we joined the incubator early part of last year. So this time last year.
Solana Labs incubator.
That's right. We were the second cohort. Yeah. We were 6 firms out of about 200 that had applied that got picked up. And that was sort of like a tremendous learning experience for me personally. You had to learn the vocabulary. You had to learn the ecosystem. You had to learn how the markets function on chain. That was really, so you have to think about what you're trying to build. You have to have deep conviction in what you're building, but then you have to start to remove the noise, because you're going to hear people doing things that are so innovative, so out there, that you want to gravitate towards that step very quickly. And that to me is a fundamental challenge by being married to Twitter. Now, brand building is an important part. We have not done that in the past. We've started to do that over the last year, I would say, right? And that's because we were focused on 2 things: building the right technology, working with the regulators. We were baked with conviction that regulations are an important part of the flow. And now that we're on the other side, I would say this: stay focused, stay grounded, believe in what you're going to build, but be of conviction that you can't listen to the noise. That's fundamentally important to the new founders. And then you really have to be gritty, right? I mean, I'll share this personal story, and since we all live in SoCal, we know what has taken place. Last year, Valentine's Day, my house got broken into. Okay. 20 years worth of stuff that I'd say got walked away in 4 minutes and cops never showed up. I'd just flown back from New York after my week at the incubator. Valentine's Day. So I dropped my family off away, come back to the house, broken house. The following week, I was back on the plane in New York, back at the incubator. That tells you 2 things. You need a support system where people understand and believe what you're doing. In this case, it was my family. 2, you have to have a deep conviction that you're going to do this, and you can never waver from that. So fundamentally, I think what people have to realize is believe in yourself, ignore the noise, build what you think is the right thing.
Yeah, I couldn't agree more. I mean, over my career, this is not my first company building ABK Labs, and we've had some very difficult things happen, both personally and professionally, incredibly difficult. And I've come to realize that most founders who keep going after going through those kinds of things, we're not normal people. I really don't think we are. And I'm not trying to say that we're special or anything like that. I actually think it's almost like an illness where you have that much conviction and you just can't let it go. You literally just can't let it go.
Yeah.
And if you have that kind of grit and you're willing to suffer, like our ability to suffer is pretty high. If you're willing to suffer, then you have a chance at making it. But if you're not willing to suffer like intensely for a long period of time, and through many adverse, depressing scenarios, you probably should just get a job somewhere, and that's totally fine too. You can be an entrepreneur somewhere and be very entrepreneurial and not carry the weight that you have to carry as a CEO or a founder of a company.
Yeah. So look. I mean, I think a lot of the founders. I mean, you know this, right? They quit just too early, or they just don't have the gumption to go through it, right? And I think that to me is like, because things take time. A lot of the fast firms that have come up to speed and that have massive revenue growth have burned and crashed because it was too easy for them to go up. It's really easy for them to come down. Things that are hard to build are really hard to build. And we're building a financial ecosystem, right? So you're involved in a technology that can fundamentally alter the shape of financial ecosystem, not just in the US, but globally. Think about that. Think about the ramification and the burden that it brings from being right, making sure people are investing the right way, making sure people don't lose their money. That, I think, has to be something that we talk more about on a public blockchain, because a lot of people really come and are building wealth, but they're starting to be now concerned about losing all that overnight, because as fast as it's built, it's equally lost, extremely fast.
Yeah, couldn't agree more. So we're coming towards the top of the show here, and I always ask this: what have I not asked you that I should have asked, or that you wanted to talk about?
Yeah, look, I mean, here's the part that I think I'm excited about. I think we are going to very soon come to a point where tokenization is going to become boring topic. That's the part I don't think gets asked a lot. What happens when tokenization becomes boring? When people don't talk about tokenization, when they don't talk about blockchain, they don't talk about atomic settlements, ownership model. The market just works. I think the real market structure is when it's quiet. You and I can just trade and just move on with the day. That is fundamentally the most important part that people don't talk about. And I think, to me, that day is going to come, Alex, when the regulators or the court system subpoenas records, but they come from blockchain. They don't come from a third-party auditor. They don't come from a lawyer who's taking 30% cut just to produce that. Look what happened in FTX. Everybody recovered their money, but the lawyers
made billions.
Made billions of dollars. It was like Enron 2.0, then plus some, right? So
Yeah.
I think, to me, one of the fundamental questions that people should be asking is, what does it look like when it's boring? And
Yep.
it looks like that you and I don't talk about tokenization. You and I talk about building some creative products, security products that we are going to bring on chain. And in the next couple of weeks, you'll see some fun stuff coming on chain, man.
Amazing. Yeah. And I was tweeting actually a similar point the other day. You just reminded me of it, that somebody, I can't remember what inspired me to tweet this, but I just basically said, one day there won't be any more crypto companies. You won't refer to companies as crypto companies. They're just companies. And they have some crypto rails down, under the hood. They'll have some AI probably built in, but no one's going to talk about it anymore. And I think that will be the day where we will all look at each other and be like, we won, we did it. And it's like, I think there'll still be this corner of the internet that does meme coins and like really is like crypto native. But I think a lot of that's going to disappear. And it's going to look like stable coins, but no one knows you have a stable coin in your wallet. You just have money in there, and it's just like, no one thinks about it.
Yeah, no, look, I mean, I think the fundamental thing over here is it always takes longer than you think it's going to take, but then it happens than you thought it was going to take. And overnight, you're going to find everything is tokenized, right? So to me, we are not there yet. We will be there sooner than we think we are going to be. So that's my hope.
Well, Manish, thanks so much for coming on the show. It's been a delight to have you. And look forward to keeping tabs on Alphaledger and all of your success going forward. Best of luck.
Thanks, Alex. Wonderful to be here. Talk soon.